Good morning to everyone out there across the fruited plain, across the pond, all you hype dorks, disruptors. Lots of companies starting to miss their earnings. Are the chickens coming home to roost? Interesting comment that just came from, who said this? Just-in-time finance. The 20 and the 30-year curves inverted right here. So that means that if you are putting money into a 30-year treasury yield, which is basically a loan to the government for 30 years, you would be getting 1.96%. Now, if you put it in for 20 years, you get more. You're going to get 1.98%. Doesn't seem like a big difference, but the psychology of it says you have more faith in the government in a shorter term than a longer term, 20 years versus 30. That's why when I look at mine, I look at the yield curve inversion of 10 versus 3. Because if you start getting a yield curve, a treasury yield that gives you a higher return for a 3-month return over a 10-year return, that's not the best thing in the world. So if you go back to 2020 and we just go to February, we go to, I think it was the 18th. Yep, it was the 18th. So here on the 18th, you were getting 1.58% to give your money to the government for 3 months. And if you gave it to them for 10 years, it was 1.55%. So it just means that you have less confidence. But the yield curves, I guess it inverted in Brazil. Last time I did that was 2016. Here you have one little inversion. Now 10 and 20, I don't really count as a inversion, but that's that. All right, let's see what the futures are doing. They're down a tick. Earnings happened yesterday. That's pretty much the news that I'm going to flip through today is earnings. And smash the like button for me, guys. Or the dislike if you don't like me. I really don't care. Let's see here. What do we want to start with? Do we want to start with Buck of the Star or Meta or Apple or Amazon or Lucid? Let's start with Lucid since nobody cares. Just kidding. Shares of the EV startup Lucid surge as much as 47% after confirming deliveries of its first car. So the company delivers one car, and the company is worth 47% more. Makes sense to me. Shares of Lucid surged 47%, as much as 47% on Thursday, after the company confirmed the first customer delivery of its $169,000 Air Dream Edition sedan would begin on Saturday. Congrats, guys. One car, 50%. What do I need to do? I need to deliver one something so that my net worth can go up 50% in a day. The customer deliveries come about a month after... took them a month to produce a car. After a month after Lucid started the production of its first cars. in Casa Grande, Arizona. A company spokesman declined to say how many vehicles Lucid has built so far. In total, Lucid plans to deliver 520 customer-configured Lucid Air Dream Editions, followed by deliveries of the lower-priced models. Lucid told investors in July that it expects to produce 20,000 Lucid Air sedans in 2022, generating more than $2.2 billion in revenue and probably negative profit. So, that's that. Speaking of which, that's disruption. One car is disruption. Paul and I built 80% of a car in our garage one time. Does that count as something? We should go up at least 20%. Amazon slides on earnings because it could have been much worse, I guess. I don't know. All right. This is the thing that... So let me read this first paragraph. Amazon stock is heading lower. This is why I don't like analysts. They're dumb. Amazon stock is heading lower after the e-commerce and cloud giant reported disappointing third quarter financial results and a weaker than expected outlook for the fourth quarter. Here's the sentence that bothers me. The company's results were weighed down by a series of factors, including tough comparisons with the surge in online shopping during the pandemic. Well, no kidding that you're going to have lower sales because people are out and going and buying things, not literally being locked up in their homes. Why would you even compare that? Why is that a tough comparison? If you use your brain a little bit, you don't even have to make it a tough comparison. It's not just something that you have to do. You can look at it and say, last year was an anomaly. There was this little thing called a global pandemic. Maybe we just shouldn't compare it this year. Or maybe we should compare it and just scale it a little bit in a different way. But analysts are very one-track minded idiots, and this is what they do. Ongoing product shortages, understandable. Higher wages, increased shipping expenses, further, etc., etc. Okay. Third quarter, Amazon reported $110.8 billion in sales, up 15% from a year ago. So they still sold more than being in a pandemic. It created more sales than being in a pandemic. Operating income was $4.9 billion. It's right in the middle of the guidance that was expected. For the fourth quarter, Amazon sees revenue ranging from $130 to $140 billion. Wall Street then comes out and says, well, it should be 142. Yep, you guys know it better than the company does. Online store revenue was $49.9 billion, just up just 3% from a year earlier, still up from pandemic levels. Revenue for Amazon Web Services was up 39%. Physical stores were up 13% from a year earlier. Actually, that number surprised me. Let's see here. Bill from Minnesota says hi and he loves you. Hello, sir. I expected this quarter to be a big miss. I wish I had enough money to put puts. I don't really think it was a big miss, to be honest with you. I'm looking at these numbers and saying, well, it's not that big of a miss. I mean, what do you expect? And who are we missing compared to? We're missing compared to these bozo analysts. All right. It's unrealistic to think if we just buy one. Okay, never mind. Let's go to the next one. Let's talk about Apple. Same story. Wendy's is smashing it right now. Rumor has it Wendy's is changing the name of their company to Meat instead of Wendy's, just like Facebook went to Meta. So they're just going to go to Meat. They actually tweeted it out, so it has to be true. Apple reported its Q4 earnings of what? Wait a second. Apple reported its Q4 earnings. Okay, whatever. They missed analyst expectations, which was more than expected on revenue, iPhone, Mac, wearables. But there was one thing that I talked to you guys about in a few good minutes, and we'll see what happens. Supply constraints knocked $6 billion off the company's top line. Revenue came in just a shade lower than expected. iPhone revenue missed pretty badly. No surprise. Mac revenue missed by a little bit. iPad revenue actually went up. But I think a lot of the iPads were delivered pre-really getting hit with supply chain issues. Guys, remember, if you watch my a few good minutes on Apple services, revenue was up. I'm telling you, Apple hasn't even gotten started with services. Wearables were down, same thing, no issue. The chip shortage is unlikely to let up anytime soon, with estimates pointing to improvements in mid, I think, to late 2022. So Apple is not fabricating chips, just designing. Nope, G1, they are actually making their own chips. The M1, the M1X, the, I don't know, I can't remember what the other one is, but it's not M something. Starbucks, fourth quarter revenue, sales missed, but the loyalty program soars. And I can't figure out why. And they didn't give a reason why in the story. The coffee giant reported a spike in active Starbucks reward members as the fast food industry leans into digital efforts to boost sales and drive customer loyalty. People are very loyal to this company, that's for sure. Revenue, $8.1 billion versus the $8.2 expected. Same-store sales in the United States were down. Internationally, they were down. China, they were down 7%. What are we here? Look at these numbers, guys. This quarter, the company opened 538 new stores, which brings the company's total locations to a record 33,833 stores globally. That cray. On Wednesday, the company announced wage increases to $15 an hour by the summer of 2022. Okay, so the most woke company in the world is lagging in their paying people. Interesting. Should just slide that in there. Facebook changes its name to Meta. Meta. So I talked about this a little bit yesterday. Mark Zuckerberg spoke yesterday. Today we are seen as a social media company, but in our DNA, we are a company that builds technology that connects people, and the metaverse is the next frontier, just like social networking was when we got started. They are actually going to change their ticker symbol on December 1st to Meta. MVRS from Facebook, FB. I'm living in a world I don't understand. Our hope, and that's from Mike Trevisano, if you guys don't know. Our hope is that within the next decade, the metaverse will reach 1 billion people, host hundreds of billions of dollars of digital commerce, and support jobs for millions of creators and developers. 2 months ago, they launched the Ray-Ban glasses, and they rolled out their Oculus virtual reality, both of which cost $299. So that's something that you guys got to think about. I mean, we're talking about, if you want to get those two devices, you're at $600. How are you marketing to younger crowd if you're selling devices that they're these expensive? Zuckerberg said, a lot of this is a long way off, with elements of the metaverse potentially becoming mainstream in 5 to 10 years. The company expects to invest many billions of dollars for years to come before the metaverse reaches scale. We believe metaverse will be the successor to the mobile internet. Noted. My mind gets blown every day. Same. Is that it? Yep, that's it. Follow us on Instagram at TraderMo_EM, at Paul Gabriel, at Seth Kirchanan. And we will go from there. I think it will fail. Lee says, I think it will fail. Listen, I don't know. To me, it's a very blanket statement to say that. And I do think it's going to, I don't think it's going to work as well as they thought. I just think about, you got to put unless they can find a way to do something, which I probably think they will. They're Facebook. They're a good company. They are very good at thinking. If you can find a way to make this better and bigger without having to make people purchase devices, then I think you're going to be onto something, because I'm not going to go and wear any goofy glasses that have, I mean, the Ray-Ban ones, they have a little dot right here. So when you have it on, there's a little dot on your face that is showing that you're recording or doing whatever the hell you're doing. That's it. Zuck is Pisaki's sister. All right, let's see what the yields are doing today. This moment in time, I did not even look at the 10-year. Oh, it's coming back down. Everything's fine, guys. The world is fine. You can be at peace. This morning, AbbVie reported, oh, good. AbbVie's up 2.7%, part of the Employee Trader Series. We'll check that out. Royal Caribbean is down a touch. ExxonMobil came out and printed more cash, had more cash flow than almost any time since 2014. Phillips 66 looks like it's doing pretty well. $78 a share. I remember I sold that one at $80 a share or something like that. Here is our software. If you want to join the Everything Money community, this is our website. All of your news stories right here. Your tickers, and this is only going to get better and better. And if you join for the $28 a month, I'm going to show you 8 pillars, retirement calculator, stock analyzer tool, 8-pillar portfolio. All of this comes on a mobile app. I think that we don't sell the mobile app enough. Guys, if you are somebody that uses your phone a lot or is always on the go, and you look at financials, you know that there's no other company out there that gives you a mobile app with financials that you can break down and look at that's not on their terrible, terrible mobile website. Like Y charts, you have to go to the mobile site and it looks like you might as well be in 1994 trying to flip through the old computers. It's terrible. What's their names? Yahoo Finance sucks. Ours is actually good. I use it every single day. And I'll tell you, if it wasn't good, I wouldn't use it every single day because I don't like being inconvenienced. So it is pretty awesome. Join Everything Money. Here you go. $28 a month. Gets you access to everything that I just talked about, all of our software, $28 a month. If you want to join the Bid and Ask Nation, that is trading with me, which we're going to have about 15 minutes to do today. $78 a month gets you that. I am doing a private Bid and Ask seminar, my monthly seminar, next Saturday, November 6th. I don't know what time. I'll probably like 10:30, 10. I don't know what time I said. I'll let you guys know for sure. But I do one once a month. You get an Employed Trader Series, Trading 101 series. You get complete access to me. So if you ever want to trade, that's the place to come. If you want to join Paul's Super Shorts, $500 a month gets you into that top exclusive tier with about 40 people. If you want to do a one-on-one session with me, $750. $750 gets you access to that. And it is a great 1 hour session with me to talk about whatever you want, but I prefer trading. But whatever you guys want to talk about, I am happy to talk about options, life, relationships. You want to divorce your wife, come to me. I'm just kidding. I don't want to talk about that. And if you want to do a real estate deal, $10,000 for with Paul for 4 hours of his time gets you that. Mo, the website needs some layout changes. Why aren't the indexes on top? Constantinos, do you realize that we have been doing this for like 10 months? Of course, there's going to be changes. I guarantee you're going to look at this website, and in 6 months from now, it's not going to look anything like this. So obviously, we're going to make changes. This isn't the end product. These are going to probably be moved up here. You're going to have futures, tickers. You're going to have everything. Calm down, friend. It's going to be fine. You're going to get it at the top. All right, guys. Oh, tell us about the TED Talk. So on Wednesday, you guys remember, especially you OGs that have watched the interview that we did with our friend Hesh Sagafi. He is a mortgage lender from his own company called Liberty Mortgage, and here in Cleveland, Ohio. And he has an incredible story, and he has about 250 employees. So I went over to his sales team of about 50 or 60 people, whatever it was, and I talked to them about just being successful, not giving up, facing adversity, etc. Surrounding yourself with the right people. And it was awesome. And we're going to be going back and doing a lot more of that. And we're going to be going to a lot of different businesses around the country sometime sooner or later, and we will do that. And it was recorded, so it will be published sometime soon. Hey, Mo, did you wear your best gym wear? You're dang right I did. I don't wear anything. Actually, you know what's funny? I wore a pair of Lululemon dress pants that day, and you know what the reason was? All of my Nike sweatpants, because I have 7 of the same pair of Nike sweatpants that I just wear every single day. Those were all in the washing machine, so I had to call an audible and switch over to my Lulu pants for that day. But I had my signature Nike pullover on, so fear not. All right, guys, give me some stocks. We'll run through them, and we will go from there. You need financial advice after your divorce. Good one. You guys, you will get the TED Talk. I promise you. You will get the TED Talk. SQQQ. Why don't we take a look at it? SQQQ. Boy, is it hot in this room. Whew. What do we have here? What is this? Oh, okay. It's an inverse. Duh. Okay. So this is just the inverse of the the NASDAQ. I'm sorry. So, I mean, I don't know what to tell you here. This is a hard one for me to play with. I would probably just day trade this. I don't think I would get into this thing for anything overnight. That's just my personal opinion. You guys do what you want to do, but I'm just telling you right now, personal opinion, these are perfect stocks to day trade. Speaking of day trading, I have my day trading chart up here. Why don't we just go and look at it? SQQQ. I rarely have this open, but I was looking for it. So this is why I like a day trade. This to day trade. So I'm just going to zoom out here. If you notice, guys, every single day you get some kind of movement during this time frame, during the day. So this every single day you get a little bit, you can execute a trade somewhere in there. Somewhere in there you can execute a trade. So that's why I like doing these. Another one I really like to day trade, LABU. This is one of my favorite ones to day trade. Made a lot of money on this back in my heyday. This, oh yeah, look at this. Look at that. You could have caught that entire run that day up to about 12 o'clock, this entire run by following basic rules. Stochastic over 80%, having good volume coming into it, engulfing candlesticks, open Bollinger Bands, perfect. Here, you could have done the same thing, thing this afternoon. This would have been on, this was Thursday, Wednesday, Tuesday, Monday. This was Friday, last Friday. So you could have done the same thing. Every day you get some kind of run with LABU. I highly suggest that you guys look at that. All right, Nike or Lulu, too much pressure. Okay, let's see. Intel, why not? Why am I typing in Intel on that chart? Intel. So if you guys want to look at some day trades from the past, I can do them this morning because I'm here. All right, so Intel is beaten down from earnings, but as we're seeing here, we're starting to see this thing kind of roll over, and we're starting to see a decline in selling volume, which is great. So hopefully we start getting some increase in buying volume. It's sitting at $48 right now, and of course we have this gap to fill. So the hard part about this gap is you're gonna have to get over the 100-day moving average and the 50 and the 25-day moving average. But besides that, you should be all right. This thing is going to develop, guys. Just be very, very patient with this one. I promise you it's going to overdevelop. Baba RSI oversold. I don't know what that necessarily means. I don't see anything oversold on here. So with Baba, like I said yesterday, I think I said this to you guys on the afternoon show. Maybe it was. I don't remember. But Baba is going to be, it's everything that's starting to calm down from China. You notice back in here, from basically here to here, you notice that there's so many gaps in there because the stock was just flying around overnight. And if you notice in this area right here, there's no gaps. So these are just normal days again. We're being fine. So that makes me say, okay, let's start taking a look at this weekly stochastic. And guys, smash the like button for me. Let's get this thing to 200 by the end of this show. Let's start looking at our weekly stochastic things now that the news has kind of settled down and people are starting to ignore Baba, and we'll go from there. So, all right, Ford. So Ford, oh my goodness gracious. Ford did, I'm telling you guys, they're going to come back down here. And if not, they're going to come back somewhere in this under $16. So they shot up yesterday and they've pulled completely back down on earnings. Maybe people are realizing that they're not totally disruptive like Lucid, but we'll look over it. David Stein, short on Apple. I don't think I would do that. Why don't we see here? I'm gonna do. So here's the problem with what happened with Apple. Apple came from here to here overnight. So it's going to gap down this morning to whatever it's at. It's minus 3%. So that's the tough part about what we're doing with Apple right now. You could get today and you could have no movement around this 3% number. So figure out what's going to happen today and go from there. I just touched the disruption bell. We are going to war with China. That seems highly dramatic. REGI as a swing trade. Renewable energy. Ooh, all right. So whoever asked me this question, I see where your head's at here, but look at this stochastic. This is tough. Your red line is not even over your yellow. So you cannot enter this thing confidently. Now, I would look at it from this side. If you get that yellow line in the sweet spot and you get an engulfing candlestick today, something like that, I would not hesitate to add to this thing today. But you have to make sure that you get something that looks that big. Did you really buy 100,000 on Intel? Yeah, I did. I'm not going to lie to you. What have we lied about? Period. Is Ford dying? I can assure you that Ford is not dying. CRSR. I also bought Facebook yesterday during the morning show. You guys just didn't know it. Right after we hit the bell, I just executed my order. So, Corsair, downtrend, full show. But what we need here is we need this thing to pop. We need it to pop up. And when we get that thing to pop, this is what's going to go first. So keep a watch on this thing. I don't think it's going to, well, I shouldn't say that. Here's the issue. You struggled back here in September, August to get through the 25. You struggled here in October to get through the 25. You're still struggling right now to get through the 25. So if you want to do some kind of swing trade on this, I think you'll probably run it up to the 25 and it might bounce down on you unless you get a ton of volume that is probably up here in this level that can really push you up to the 50-day moving average. So please be careful with that one. It's a good stock to trade, I know that, but just be very careful with that one. Uncle Don is alive and well. Yes, he is. I have spoken with Don multiple times, and he is great. Okay, so I'm going to type in Facebook, or do I type in MVRS? JK, it's December 1st. Facebook, what do we got? Oh, look at that. That thing popped. So, wow, that's great. I bought it at $313. Look at me. So now can I go out and tell all the hype dorks I was right about Facebook? That's what they do to me. You were wrong about this. Oh, okay, cool. So Facebook, this is the reason that I like Facebook from a trading perspective. I like it from value more, but from trading, you were completely beaten down and holding the 200-day moving average. Earnings is out of the way. Great. The market as a whole is kind of taking a breather. If this market decides to get turned up and start like truly breaking out to all-time highs, what's going to lead it? It's going to be Facebook. It's going to be the FANGs. It's going to be the MANGs. Get it? The MANGs, Meta. The MANGs. So this thing is at the bottom of its stochastic. It can get turned up and go from there. It's not Facebook. It's Meta, bro. Yeah, it is. Speaking of which, a name change like that deserves a ring. I'm telling you. Sheesh. The Meta book. The Meta book. There are some awesome memes out there, I am telling you. CLF. So I'd like to tell a story about this one for those of you that always ask me about FOMO. Okay, how do you fix FOMO? Seth, I told this story to you on the other day when we were talking about Tesla. So let's zoom out here. This is what you guys need to develop. The understanding that, guys, in your lifetime, you are going to miss out on stocks. It's gonna happen. I bought CLF back at $8. So I think it was right around here. This thing started moving up, and I bought it for a long-term investment. Of course, everything fell apart, and this thing literally went down to $2.50. And I was like, okay, whatever. It was a large loss, but I was just going to hold on to it. It started to make this beautiful run up. There was something that happened around $9, and I said, okay, I think this run is over. Next thing you know, I sell the thing. I make a profit on it. Next thing you know, the Wall Street Bets people get involved, and this thing skyrockets. And within 2-3 weeks, that thing was at $20 a share or something like that. Mind you, had I held it that long, that would have been $1 million profit, $1 million plus profit. Now, was I upset about it? No, because I literally did exactly what I was supposed to do. And sometimes the chart just goes against you, and Wall Street Bets goes against you. Guys, it happens to everybody. Some of you complain about, I shouldn't say complain. Some of you get upset about when you lose a couple percent here, a couple percent there. You miss out on this, you miss out on that. If you follow your rules in the long run, you are going to do very well. There's going to be times where you miss anomalies like this. There's also going to be times where something like that happens and this thing ends up back at $2.50 and you're going to think to yourself, you're a genius. If you just follow what you're supposed to do, it's going to be okay in the end. But would $1 million extra would have been nice? Of course it would have. Then I could have gone and bought Tesla with it. Ha. All right, next. But I promise you, I had zero emotions about that. It didn't even cross my mind again. It is what it is. I know that if I stick to what I'm supposed to do, I'm going to be better off in the long run. I'm not looking for grand slams. I'm looking for singles and the occasional double. That's how it goes. Okay. And somebody just said oof. Listen, I'm trying to get you to not say those things. Does it suck? Sure, it sucks. But you need to get to the point where you're saying, that's going to happen to me. Okay, on to the next. Go find another good stock to trade. That's all you got to do. All right. That's the end of my story. Veil. Oh, wasn't this supposed to be the greatest thing since sliced bread up here at this $24 range? Interesting. So, oh, my bad. Seth, valet. Let's see. This thing has come all the way back down, and I would not be surprised. There's no support in here, so I wouldn't be surprised to see this thing come back to this $10 and change area. So, just keep rolling with it. I would definitely do some day trades on this, but yeah. Matt Jones just said, Trader Mo is looking for singles. R.I.P. Nicole. That's pretty funny. WGO. That is a nice compliment. Okay, to her, not me. All right, so Winnebago. Here. So right now we're just holding a very nice support level. And what I would do is I would throw this over here on a swing trading chart. And this is a really good looking swing trade. Nick, please throw this into our watch list for swing trade. We might have something here. The volume is actually looking pretty decent. We can probably run this thing up to the 100-day moving average. Let's see how this does at the 100. So here's what I'm looking for, guys. I'll talk out loud. What I'm looking for is every time the stock gets to this 100-day moving average, what happens? It falls back down. It tried again, fell back down. It tried here big time, and it fell back down. So what I'm thinking is we'll probably challenge the 100, peek through it a little bit, and then fall right back down. The market is now open. We're going to see what happens today. Where is Winnebago opening? So Nick, if we get an engulfing candlestick today, we might have something here. I will do 2 more stocks, and then I got to get going. Because I have people here blowing out my sprinklers because winter is coming. AMCX. Yeah, they've been abused pretty badly lately. I know a lot of you guys look from a value perspective. This was all Wall Street bets, peeps, getting in there. All right, let's see. So right now, I would probably take a peek over here and just try to get a swing trade out of this. But of course, wait until you're in the sweet spot area. I do think that once volume starts coming in, hopefully earnings comes out and the stock reflects positively, and we can make a bump over this 25 and 50-day moving average and roll it up there. So let's see. What else do we have? Give me one more stock. Okay, I'm going to do Chewy. And the reason I'm going to do Chewy is CHWY. Because I thought this was a really good looking swing trade. Why is my chart not popping up? There it is. And it's an okay swing trade. So should I exit from this? What did this person say? Shall I get out of Chewy? I would take, depends on the trade you're making. If you're making a swing trade, yes, exit Chewy. Because you hit the 50-day yesterday. You fell right down. You have dropped below 80%. No brainer. Follow the rules. Exit Chewy. And you shouldn't be in Chewy from a long term. So, yep, that's exactly what I would do. All right, guys. That is it for today. Okay. Payne, I'll do Mara. You've asked me so nicely so many times. I don't think I didn't see you. Okay. Oh, what? Come on. What is this? This is a hype stock. Marathon Digital Holdings. All right, whatever. So, from a long-term perspective, I would be taking my profits right now because it's struggled for about 2 weeks to break through this level. The only way that I would keep going with this is if you broke out and took out and made a new all-time high. Even from here, from a daily perspective, this is giving you an indication of what's going to happen over here. This red line is going to probably roll under. So it's facing that strong resistance point. Volume is declining. You have a downtrend. This happens first, then this follows. So that is what I would do. You'll probably run this thing back down to the 50-day moving average and go from there. So you guys have a wonderful weekend. I will see you on Monday, same time, same place. Go make disruption this weekend. I'm going to go disrupt my brain and I'm going to move. So that's going to be a tough one. Peace, guys. Love ya.